we have a little bit more ones, a little bit more optimists, and 2 and 3. I think it's going to be actually 2, right? So my answer is 2, right? So if H1 is 2 and H2 2, all it means is that we will break this bottom, right? You can't really, you know, market is not going to stay like this till the end of the year. I mean, it could. It doesn't have to be, right? I mean, it could, I guess, just continue just going like this. It could. But I think we're going to drop, right? We're going to drop, probably not as much as I thought before. You know, before I thought we're going to reach 280, 260. Probably not, probably 320 at this point. But we will break 350, we'll reach maybe 320, maybe even 300, we'll see. And then end of the year with, you know, November, December, we will have a rally and probably end the year flat. Flat, or it could be, you know, just depends on the inflation date. It could accelerate and, you know, maybe a little bit lower. But I still think we're gonna end the year in 2, right? Somewhere between 360 and 420. So reasons for that. One is right now there's a fear of missing out. So I think market is going to continue going higher, right? I mean, the rally is very strong. I don't know what can deteriorate. So most likely we'll hit 430 and even break, maybe 440, 450. Right? What's the, let's see. So it was 25%. What's the rally now? 18. So 25. If it's going to be like 2002, 2003, so 430, maybe 440, right? 25%. So right. So I think now my core scenario, we hit the top somewhere April, May. You know, in June, July, we start testing the bottom. Right. And then towards the end of the year, you know, very small rebound. Why? Why do I think this way? Main reason, again, main reasons are interest rates, right? Even though Powell sounded very kind of casual and very relaxed, he did recognize that most likely the inflation, the goods inflation is going to continue to go down, but the services, the wages, the rents, especially with full employment, right, and high cash levels, nobody's going to lower their rents. I mean, they think that people are going to lower their rents, not if it's full employment or people going back to work, right? The reason they're going back to work because they can't afford their rents. So they, you know, as long as you have a job, landlords, you know, they might lower their rents a little bit, but not significantly, right? So that's the argument, that as long, and interest rates, right? I have some investments in properties and they're all are under, right? Because of the elevated interest rate environment, all these construction, all these projects, not all, but a lot of them are underwater, right? So it's very hard to refinance your debt, right? If you have a short-term debt that comes to due date, right? These large construction companies, they're gonna sell, right? They're gonna try to find a buyer and get rid of these properties. And that's why, you know, it hasn't reached that level, but at some point the system is gonna start shaking because simple finance courses, if interest rates stay elevated, right, terminal rates at 5%, then it's just a matter of time for earnings to hit the recession. And we actually seeing this right now. It's just right now everybody is looking at the glass half full, right? If Apple announced the same earnings, or Amazon, when Amazon announced the same earnings last year, right, it was down 20%, and the earnings were not as bad as they are now, right? Right, but it's a perception. Right, so earnings here, Amazon at some point was down pre-market over 20%, right? It was down close to, I think, 87 level, right? And then it jumped after the hours. Here, Amazon basically down only 4%, and earnings are a lot worse, right? So the idea is that it's not that the earnings are bad or good, it's just how do people interpret these earnings, and do they care about the current quarter earnings, and do they look into the future? And if the future looks half full, right? If the future looks half full, then you basically you rationalize it, right? You say, yeah, maybe it's contracting, yeah, but it will restock, right? Apple will, they have new model of Mac, right? New processors. You know, next quarter the demand is high. You know, Tesla is basically saying that demand is outpacing supply by the factor of 2. So things will get better. Things will get better, and that's why everybody's kind of looking, you know, outside of these current earnings. But basic financial principles is that if interest rates stay 5% throughout this year, then at some point we will hit the earnings recession. If it's not Q4, it'll be Q1. If it's not Q1, it'll be Q2. If it's not Q2, it'll be Q3. But earnings will get worse, right? Because two reasons. One, debt is at 5%. The other reason is the dollar, right? Right now, everybody's kind of ignoring the dollar, but dollar is, you know, it's not reversing, but it's stable, right? And we see this green candlestick for the weekly chart. It's holding on to this 100 level. It's been as high as 103. If there is a follow through, let's say next week, where dollar gets to 103, 104, 105, right? If there is a rebound, we don't know yet, but I do anticipate at some point this, right? And if there is a rebound in the yield, right, at least it gets to 3.7, 3.8, right? Unemployment is historically low, right? 40-year low unemployment. That means the Fed is going to have to stay at elevated interest rate higher, right? And rates are going to start at some point going higher. So those are the main reasons. As long as the dollar doesn't do, if dollar does this, that's soft landing. Then you know, I would have to go back to the whiteboard and change my mind, right? If interest rates drop to 2.5%, you know, then yes, then the financial conditions are getting more accommodative, and you know, and then market will rally. But as long as the dollar is not collapsing, and as long as the yield is not collapsing, you know, at some point, market will capitulate. Probably not the first half, because now we're entering from seasonality, very bullish time of the year, and everybody feels a fear of missing out, right? You know, Coinbase is down, right? I lost, you know, half of my money last year, you know, so I'm going to double down, right? I'm going to double down because, okay, it's going back to 350, right? Coinbase is going to 350, you know, buy at 860 until it's too late. And all the charts look the same, right? You look at Meta, you look at Netflix, the charts look identical. So those are the reasons, right? The reasons I think I'm not changing my opinion, even though obviously, you know, I'm, you know, not only I'm off on timing, I'm also off on the magnitude, right? For, you know, such a fast rally so quickly, it's kind of, but we know, you know, it's almost the same rally we had in June, right? This rally and this rally are almost same magnitude. They're not really much different, right? Here, the rally is 18%. Here, the rally is 19%. So, it, you know, 18%, 20, 25, that it's all, I think, in the same realm.